Welcome everyone. I'm here with a new video for all of you as we are going through our trading journey and we are learning. It's uh, it's always good to share our knowledge and benefit each other, and that's the reason I'm trying to post all these videos with whatever limited knowledge that I have, right? So here is the Trade Station platform. It is one of the brokerage firms within US. I like this platform very much because there is a lot to do with respect to the analysis and the research that we can do right before we can take a trade, right? I strongly believe trading is just like mathematics. It's all numbers. You need to do your own research, do your own calculations properly before you enter into a trade. And you should be very clear on what you are trading on and what you are playing on, right? What your stop loss should be, when you should exit the trade, what is the risk that you take in the trade, etc., etc. Okay, and for this reason, I found Trade Station as one of the platforms which is helping me a lot in learning, and I can do my own research, before I take a trade. Okay, so let's look at this, and I have designed this particular uh, what you say is a workspace. So within Trade Station, you can design your own workspaces, however and whatever way you like. But I like this workspace a lot because before I even go and look at some stock like Microsoft, Tesla, Google, or CRM and all, I would like to have high level 36,000 feet overview of what is going on in the market, right? So you cannot just go at 9:30 a.m. EST when the market opens, you cannot just take a trade. You need to be looking like at the holistic view or overall view of how the different sectors in the market are performing, right? And then you can take a decision, and your decision needs to be very wise because we are investing your own money, right? Hard-earned money. You should not put that at risk. And we have our own experiences from our own investments we have seen in the past, right? And that's the way to learn. So here is the Trade Station workspace. You see whatever information you see is on the first column. You see the name of the ETFs, which are the international markets. So these are all the international market ETFs that trade on the stock exchange. Now, if you ask me what an ETF is, it is just like uh, an asset category, investment category, just similar to mutual funds, but there are some differences. ETFs are specific investments focused on a particular industry. So if you see SPY, which covers all the companies which are listed on the New York Stock Exchange and which are trading in the US stock exchanges, it is it is kind of covering all of them, right? So if you look at the others, like QQQ is our technology ETF in the US, and QQQ has all the companies which are technology based or technology focused industries, right? It is covering all those companies. So you have different ETFs. So we have the international markets, we have the US sectors, we have the precious metals, we have the energy. If you come down, you have the alternative energy, you have agriculture, and you have the industrial, right? So what is it that I am trying to accomplish looking at this dashboard? So I consider this dashboard, I look at this early in the morning and I try to figure out how each of the sectors within the US or internationally they are performing and how are they performing with respect to SPY, right? So in this tabular format, whatever data that you see, so here is the ETF that I have. Here is the name of that ETF, right? And then you have the last price of that ETF, the last price which was traded on Friday, October 20th, whatever the last traded price was there on the stock exchange for the ETF. We have the net change, if it changed, did it go up or did it go down? Did the price of the ETF rise or it got reduced from the previous close? We have the percentage change. So we know that, okay, SPY was down 1.37% from the previous trading session, right? We have the 52 weeks high and the 52 weeks low. So I think we got this high during the COVID times when the government was spending on on the economy, and they were releasing checks to everyone during the COVID crisis, right? And then you have the 52 weeks low, which means that in the last 1 year, what was the lowest price of this ETF, correct? And what was the highest price of the ETF? That is what it signifies. When you come to this percentage, current percentage means in that channel, if you consider, so if you consider the bottom of the channel as 363, if you consider the top of the channel as 469, where the price of this ETF sits with respect to the low, with respect to the bottom of the channel. So it is at 59%, if you see, right? And then if you are able to compare the relative strength of that particular ETF, and you compare it with SPY, which is the like ETF for our mother index, SPX, right? So you see some of these sectors or some of these ETFs are lagging with respect to the performance. If you compare with SPY, some of them are ahead. They are ahead of the SPY. So let me give you an example. So out of this section, it tells for all the international markets that we have, right? We have the different ETFs for each of the regions. So you have for US, the SPY, the main ETF that we have, which tracks how the economy is doing. You have QQQ, which is for the technology index within the US. You have the China index, which is the similar to SPY. They have GXC in China, and so, whatever ETFs that you see, right? So now when I see, and let's have a quick look. If I compare QQQ, which is the technology index in the US, how do you see it compared to SPY here? If you see, right? So if you see the relative strength of this technology index in the US is lagging behind SPY as of that particular trading day on Friday, and the momentum on both the SPY and QQQ is negative. Now, what do you mean by momentum? Momentum means is the price of that particular ETF or stock trending up or trending down? So if the momentum is trending down, or if it is negative, which means that there is a downside in the upcoming months or weeks. If the momentum is positive, it means that more and more people are interested in buying that. More and more people are chasing that particular ETF or stock, right? So if you see the momentum is negative, which means that it is bearish for the ETF. And if the momentum is positive, you will see it is like bullish, right? Now, similarly, you can come down and you can see the different US sectors. Now, this is the most important information I review before I even place any trade. So as of Friday, the October 20th, all the sectors were negative, which means that the whole market in the US is going down. All the different sectors like the technology, you see the consumer staples, you see the healthcare industry, energy, you see the telecom, materials, all these sectors in the US markets were down, which means that then the SPY was down, or all these sectors are trending down as of Friday. Now, if you compare the performance of these, let's have a look at XLK, which is at 71% in that range between the 52 weeks low and 52 weeks high. The current price of XLK, which is the technology ETF in the US, it sits at 71%, which means that it is just 30% below from making new highs, right? Within the last 1 year period. And if I compare the same with the SPY, the relative strength is negative and the momentum is negative, which means that this particular ETF or particular industry or sector is not performing well as compared to the SPY ETF, right? That is our benchmark, if you know how it works. Now, let's look at some of the ETFs which are doing well. So wherever you see the relative strength difference is positive, I will just double click and you are able to see. So Latin America 40 ETF, let's say, if we talk about the international markets, this ETF is performing well and it is giving you more returns compared to the US ETF SPY, and it has positive momentum as well, right? Similarly, if you see Invesco India portfolio, which means that the Indian market which is still an emerging economy, it is giving you more returns compared to the SPY, and the difference is 0.38 and the momentum is positive, right? So what do you conclude from doing all this analysis? I just want to see whatever sectors within the US, like here, the US sectors, or whatever countries ETFs are performing ahead or lagging, not lagging behind, or who are ahead of the US markets, who are providing a better return compared to the US stock markets right now. I would focus on those if I am a bullish guy, or elsewise, if I am a bearish guy or if I'm a bear, I would like to focus on only on those ETFs where the relative strength is negative or the momentum is negative with respect to SPY, right? So I can buy calls for the ones which are in green here, and I can buy puts for these which are in reds. But it all depends on the timing. So we have to do more analysis and we have to do more research, right? Let's come back to the US sectors. So we have XLE, XLU, XLP. You see, as of October 20th, which was the last trading day or trading session, the energy, utilities, consumer staples, you have the telecom, healthcare, all these sectors are performing well compared to the SPY. So what does it signify, or what information does this dashboard give to you in making your trading decision? You should consider only trading those stocks if you are bullish in these ETFs. So whatever particular stocks, so to give you an example, consumer staples, Target, Walmart. So if this is performing, this particular consumer staples ETF is performing better than the SPY and it is positive, you should consider investing into Target, Walmart, or the related companies under this category or industry if you are bullish, right? Similarly, if you are bearish, you should take the other way. So this is one of the way you can identify what is going on the overall market, right? So in my opinion, and if you agree or disagree, you should only go long for a particular stock only and only if that particular ETF or industry is giving you positive returns and it is stronger relatively with the SPY and it has a positive momentum, right? If you take any position, let's say for Tesla or Microsoft, if our technology sector is not performing well, if it is down, if the overall QQQ, for example, is down, if you see here right now, right? And if it is not providing you adequate returns compared with SPY, taking a long trade in the QQQ or in the technology stocks is not a good idea, because if the overall industry is down, there is a lesser chance that your stock will make you money if you're a long or if you're a bull. So this is the way we do the analysis in right at 9:30 in the morning, and we look at the overall picture, whatever is going on in the markets, and then when you have that 36,000 holistic view, right, 36,000 feet view of the overall market, and then you drill down to the specific sectors which are performing better than the SPY, and then you look at the companies which are performing better within that particular sector, and then you take the trades. So this is one of the ideas I wanted to discuss with all of you, because most of us don't do that. We just go with whatever stock is higher or lower today because of so reason, and we take calls and puts, or we buy and sell the stocks. But you should do this analysis before the market, before you take a trade after the market opens. So I hope this video provides information to all of you, and we can take calculative risk, and we can take some trades which can benefit all of us. So thank you and take care.